Hey guys, in this educational video we'll discuss why higher time frame analysis is so important. First, we'll discuss the theory, we'll discuss the basics of key levels, and then on multiple examples I will show you why it is so important to look left at structure and why it is so important to analyze the historical perspective. Please don't forget to like this video and subscribe to my trading page. So, traders, let's start with the theory. Yes, trading different financial markets, we rely on price action. Yes, and with price action, we identify the key levels. Yes, watching this bullish trend here, we are expecting a bearish movement from key level. We are expecting a bearish reaction once the price reaches some important historical structure. And looking left at structure, we usually see that structure. Yes, you can see that here on the left, we have a very strong structure. And from that structure in the past, the market dropped sharply. And of course, in future, we expect a similar kind of reaction from that structure. And from that structure, we are looking for shorting opportunities. However, there are the situations when we don't see any structure on the left. Yes, looking left at structure, we don't see how the market reacted to the current levels in the past. Yes, and in such a situation, it is very hard to make any prediction. It is very hard to see where the market is going. It is very hard to see from where the next correctional movement or the market reversal to expect. And in such kind of situation, usually higher time frame analysis helps. Once we switch to higher time frames, the chart unveils the levels that were tested by the market in the deep past. Yes, and it helps us to make some predictions. Yes, you can see that right here. Many years ago, the market reached that structure, and most likely, we will expect a similar kind of reaction from the structure the market once the market approaches that again. This theory is better to be explained on the example. Take a look, traders. On euro dollar, we have a very strong bearish trend, and recently the market set a new low, right? And the point is that analyzing the price action, we are always trying to identify where will be the next strong support. And looking left at structure, we don't see any structure right here. And the situation doesn't even change if we switch to a weekly time frame, because here we don't see historical levels, right? So switching the quote provider traders and opening a monthly time frame, you can see that right here suddenly very important levels appear. You can see that here we have a very important zone that was respected 20 years ago, and you can see how nicely how strong resistance it was in the past, and after the breakout it turned into a very strong support. So that is a very strong structure, and we found that only applying higher time frame analysis. Yes, you can see that without changing the quote provider, without opening a monthly time frame, we couldn't get where the market is going. But with this higher time frames, we finally spotted important structure. We now see that the market already was trading right here, and it gives us some confidence. Let's open some other example. Let's open pound dollar pair. On a pound dollar pair, the market dropped sharply. Yes, I guess you saw how bearish opening we got today, and you can see that the market is falling sharply. And looking left at structure, again, we have a very big problem. We have no structures right here. Yes, and if we open the weekly time frame, again, no key levels. Again, we should try to change the quote provider. Yes, and changing the quote provider, we see the key levels. Yeah, switching to a monthly time frame, we can see that 30 years ago, the market already tested these levels. Yes, you can see that here we got a very important structure from where the strong bullish movement initiated, and watching how the market was rejected from that on a daily time frame. Yes, watching this long wick right here, we see how strong structure we spotted applying multiple time frames. Yes. So traders, what I'm trying to say is that higher time frame analysis is very important. And when you analyze the price action, when you don't see any key levels on the left, don't forget to check higher time frames, because quite often higher time frames will show you important levels to watch. I hope you enjoyed this educational video, traders. I hope you got the point that I was trying to make. Let me know in the comment section if you have any questions. Also, let me know what do you want to learn in the next videos. Traders, please like this video and subscribe to my trading view page.